Our first session today will involve a conversation with me and one of Southern California's, indeed, really this country's most successful investors, and that's Ric Kayne, the founder of Kayne Anderson Capital Advisors. Ric was educated as an undergraduate at Stanford. He took an early interest in statistics and decision theory, which I think has served him very well, as you will learn in terms of the way he thinks about the investment business and the sort of things he's doing. I preceded me by a year or so up there, but it was a real time, the late 60s up at Stanford, but we'll leave that aside for now. Following that, he came to the Anderson School, where he finished up and got his MBA. He's been an equity analyst. He's worked with a number of interesting firms over the years. And he founded his investment company back in 1984. We're going to talk a little bit about alternative assets. He's an alternative asset manager. And the company has well over 25 billion, 26 billion in assets. And they have a thing about energy, which will be something we talk about. But at the heart of all that he does is really a view on the world and where we can go as investors. And that is what we're going to have a chance to talk about. Joining me in welcoming our speaker for this afternoon's session, Mr. Ric Kayne.
Shall I just go?
Hey, Ric.
Okay.
Yeah, why don't you start off with a public
Soliloquy?
statement, a public statement.
Well, actually, I was a statistics major, and I took a course in my sophomore year called Elementary Decision Theory, and after which I thought time was wasting and I ought to get on with it. And but I did finish the academic career and began in the investment business, I think when I was probably 21 or 22 years old. And started with an investment philosophy that has stayed to this day. To a certain extent, while I am in the investment business, I've always thought of myself as an investor. The only problem as a principal investor in the early days is I didn't have very much principal, or I didn't have any principal. But over time, that's I've always thought as a principal, and I began with a goal to be an above-average investor, and quite importantly, in a defensive fashion. And I think if you asked, you were sitting around with a bunch of people that were in the investment business, and you asked who would like to be a below-average investor, you probably wouldn't find all that many hands going up. But it takes a different approach to be above average, because being a traditional approach is average, and it's impossible for average to be above average. So,
Kind of works that way.
yeah. So in the early days and through the firm, essentially, we have tried very hard to attack what I'd call neglected, overlooked, or misunderstood kinds of opportunities, and to bring to those areas, all of which, because of their size or complexity, carry higher cost of capital than the more mainstream investment activities. How do you mitigate the risks of being involved in these niches? And we've come to believe over the years that above average performers, both in business and the investment business, rarely accomplish that through luck. It can have an impact on a short-term basis, but essentially, I think the ingredients that I've always found to be common in all of those above average performers is that they have competitive and they develop competitive advantages. And we think of those competitive advantages and we break it down into two main ones, and then there's a third part of it. But the first one is what I call a knowledge advantage, knowing and understanding what you're doing. And the second one is having a lot of opportunities to choose. Once you know, if you really know that $1 is selling for 50 cents, and you could recognize that. What you really need is a repetition of opportunities to select from, because if you really know and understand, but you have to wait for the phone to ring, it's a tough business. Or if you don't understand and your phone is ringing all the time, then you really got a problem. So you've got to match the two together and develop a knowledge and a sourcing advantage. And then because we've been around a long time now and we have a Rolodex and history and experience, we've been able to add in our firm what I call a network effect, so that we can essentially try to make success, I don't know whether we'd call it inevitable, but create for it a higher probability. So we think about competitive advantages, and as Al mentioned that we're involved in a number of different areas, and what I think about in any areas that we involve ourselves, we want to have competitive advantages, or at the very least, we do not want to suffer competitive disadvantages. And I think I could say with some assurance that I feel strongly in all of our areas we do have that.
Could you talk a little bit about, I know you've done a lot of work in oil and gas and energy. Could you talk about a little bit about some of the sleeves that you have seen over the years as real opportunities?
Well, we've been involved in oil and gas. Essentially, we spent our time in the early days of the investment of our pursuit of returns, just looking for individual opportunities where we could find dollars that were selling for less than $1. In the early 90s, you had quite a severe dislocation, and people probably remember the days of the RTC in real estate, but you also had those kinds of dislocations in the oil and gas business. And so we chose to get involved in the oil and gas business at that time. And so that would have been like 91, 92. So we've got a lot of history in the oil and gas business. At the time, the United States was a completely different place in terms of energy. It was a very, very mature area. The production of oil and gas was in a steady decline. It was thought of as really not having exciting prospects. And I'd say the business at the time was squeezing more out of the sponge rather than finding a new sponge. And so the majors who dominated the ownership of properties began selling their old properties because they were not terribly interested in taking a well that was doing 100 barrels a day and making it into 200 barrels a day. They wanted to find a new sponge. So they picked up their bat and ball and went off to Kazakhstan or West Africa or places where they could use their capital, they could use their political skills and their top brass to go find something big. But they left behind a trail of opportunities that were for sale. Those were going to be the source of funds for them to do the new things. And the entrepreneurs were the logical ones. They brought cost control and they brought an entrepreneurial zeal to it. But they didn't travel through time with saddlebags of capital. So we set ourselves up to be a capital provider to those companies, and over time kept on building and enhancing our business there. The reason that we saw in our early pursuit of opportunities, one-off opportunities, but when we got into the oil and gas business, we saw it as a long stream of opportunities. So our strategy became to field a team and bring overpowering force to own that area, to develop competitive advantages in that, so we would be the centerpiece of it. And so we've been doing that now for 27 years.
Wow.
And by and large, I think we've probably had gross, thankfully there's a difference between gross returns and net returns that's worked out pretty well for us. But the gross returns probably have been in the 25 to 30% range for that 27 years. That said, I would tell you that the pursuit of return in that oil and gas business is dependent on the price of the resource. And so we've had years where we've made nothing, and we've had years where we've made, or different funds where we've made double that return, but it's been a pretty good thing.
Well, given your philosophy of investments and seeking competitive advantage, what do you think is going on now in oil and gas and the energy business. So let's just back away and maybe look at the context in which, say, an investor might want to look at those spaces. And how do you think about it?
Well, the United States is in a very unique position in the oil and gas business. I don't think there's anybody here that has not heard about shale, and the United States is a oil and gas miracle. It is we're one of out of the Permian itself, we're one of the largest producers in the world. The country is now the largest producer in the world, or very close to it, and we've turned things around completely from that declining profile that we had with the new shale business. And the United States is actually the only place in the world that practically can develop shale. And when I say that, I don't mean that the shales do not exist in other places, but the United States has a different set of laws than other places. And what happens is, if you buy property in the United States, you not only own the surface rights, but you own the subsurface rights. And that's vitally important to the oil and gas business, has been, in the sense that if you own the subsurface rights, and if somebody thinks that there might be oil under your property, they will come to you and they'll say, I'd like to drill wells, put capital into it, and drill wells on your property. And the rancher that owns that property said, be my guest, just pay me a royalty. And so as a result of that, the United States has had millions of wells drilled. These laws do not exist in Germany, in Western Europe, in Japan, or in China, any of those places. And so there has not been the entrepreneurial drilling in those places. The importance of that for the shale business is every time a well is drilled, it produces a data signature. So in the old days, of conventional drilling, what they would do is drill a well and they would look for a big thick sand package. And if they found it, they would produce that well. If they didn't find it, they would call it a dry hole. So that's what the old exploration business was about. But each of those wells produces, in effect, it's almost like an MRI. And it would show, it's not just that one package they would show. They would go through a show of a sand package up here, 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 and here, none of which were large enough to produce from. But because there are so many wells and so many MRIs in the United States, that they began developing a different program, and they said, well, wait a second, if this exists up here, and it is in this well here, and this well here, and this well here, I'll go down, I'll go sideways, and I'll cut through that entire seam, and I will produce from that entire seam. So the reason that the United States is the only place that practically can do it, it would be like a pig in a poke anywhere else, because nobody has had the volume of wells drilled and has the data that they have in the United States. So the miracle exists here and is uniquely here for some significant period of time. What that has done for us as a country is it has made us uniquely competitively advantaged in the world. We are now the most prolific producer of natural gas in the world. We have reserves that will go well beyond our lifetimes and the lifetimes of people here. But what it really means from a competitive advantage, and energy is in effect the essence of human activity. It is the essence of prosperity. It makes the trains run. And so the United States is where somebody drills a well in the United States and they produce gas and they sell it domestically for $3 an MCF. It happens to be less than that now. What is it, about $2.70, Paul? Something like that. But if they want gas in Germany to run their factories, or they want it in Japan, or they want it in China, we're happy to help them. We just take it down, we liquefy it, we put it on a boat, and we send it there, and they put it in a factory and make it gas again. That takes the $2.75 and makes it $8.75. So from a competitive point of view, as a raw material in running an economy, we have incredible competitive advantages in that. And it's unique, and it will be something that, unless the politics seriously interfere with it, will provide us for a very, very long-term competitive advantages.
Well, that's fantastic. People have talked about competing. It has geopolitical implications because of the previous producers of oil and gas elsewhere, like Russia, for example, who had virtual local monopolies. There's a way to knock them off, I suppose.
Well, you know, I mean, if I was Germany and my supply was all coming from friendly Russia, I might think that I might want an alternative supply.
I think that would be a good thing to be thinking about. Now, you have you're an alternative investor. I mean, you'd see yourself as investing in alternative assets. Could you talk a little bit more about what some of those specialty sleeves might be?
Well, we did the oil and gas business, which is defined as the upstream end of the business is where they poke around and try to find the resource. We also did, in 1998, we established a business in the midstream, which is where you transport what you've gotten to, refineries or people that will process it in different ways. So we're involved in the upstream and the midstream. In 2002, with the crushing of the internet, and small companies went begging for capital, we set up a growth capital business where essentially we were providing capital to small, growing, profitable, private, entrepreneurially started businesses, and at a time when there was a dearth of that capital. What's interesting is, talked a little bit about, well, I haven't really talked, I have one of the burning issues that consumed me when I was at school was, did the Indians make a good deal when they sold Manhattan? And so I took a little HP 12C calculator and I put in 300 years, and I put in 6%, and I put in $24, and I pushed the future value button. I've since learned that the actual purported trade was in 1628. But if you took $24 and compounded it for 300 years at 6%, it would grow to be $937 million. You can do it on your calculators. What intrigued me, though, is what do you think it would be if the Indians had only invested at 5% instead of 6%? Any guesses? 937 is 6%. 5%, most people guess between 6 and 700 million. The number is 54 million. And the number at 4%, which to a lot of people doesn't sound all that different than 6, is 3 million. So I came to the conclusion pretty quickly I was unlikely to live for 300 years. But at the time, and you, with your young age, you probably remember in the 80s, people going around from bank to bank because they could get 100,000 insured, and they were getting 8% on their money for taking no risk. At the time, we were making 20% a year doing fancier stuff. And so I said, well, wait a second, if I do 20% a year in an 8% world, how long will it take to make the same difference? And it takes 28 years. So I said, okay, I've got a couple.
That's doable.
I got a couple of those in me. So I've been on this, on this crusade for the last, a 56-year thing. It's probably 45 years into it. I never counted on my wife's spending patterns, which in all candor, as my daughter will acknowledge, it really was my spending. Okay, and taxes did take a bite, but they spend pretty good too. So that's been a negative compounder for us. But compounding really does matter, and I bring that up because today in the growth capital business, we are virtually exclusively in providing technology-enhanced companies that are trying to use the power of the computer to attack and bring productivity enhancement to business. And so at Stanford, when I was there, Intel was next door, and Gordon Moore came up with his Moore's Law. So Moore's Law was a doubling of the capacity of the computer in effect every 18 months, which unfortunately has now been 50 years, so it's 35 doubles, and he's been pretty right. Okay, so the number one going to for 35 doubles carries you to about 5.5 billion times. And so I don't know whether you did it, but carrying the trays of cards into the computer center.
I drop them often.
And you drop them often, and as opposed to the iPhone, which is more powerful than that entire center. So what you've got is the computer is that much more powerful, and now applications are growing in the same way. So we've been trying to look around and find engineers that are in garages all around the world and who are trying to make breakthroughs and to disintermediate business processes. And it's a fascinating area. It's a fascinating area of entrepreneurship. And so we've been doing that now for 17 years, and we've had very high rates of return doing it. And so we just want to partner with those people. We want to, and we wait for them to make a breakthrough, and when they make a breakthrough, then we start talking to them about investing. So that's one other thing. The second thing, one other area is in 2007, it was pretty clear to us that that was not going to end happily, and it was a credit gone wild, and we all know what happened in '08. But we didn't want to invest in that freight train that was coming quickly, but we wanted to prepare ourselves for when it went off the rails. And so Terry Quinn over there is my partner, and we asked him to go out and find the best talent he could find that would help us to pick up the pieces in the real estate area and in the credit area, because we felt as though banks would move into non-bank banks as somebody slapped their hands with the ruler, and that real estate would go begging. And there's an old story that if people have ever heard John Anderson talk, he characterized businesses and investments in their cow-like and pig-like characteristics. And it was, and cows give milk, and the owner enjoys the milk from that cow, but on the other hand, pigs don't give milk. They have to be fattened up. And so at the time, he was admonished, don't get yourself over-leveraged and over-committed to pigs, even though the great stories of our times are pig stories, because you can go to premature slaughter. So, so we've always been a cow farmer, and I asked Mr. Quinn to go find people that were extraordinarily talented in cow farming activities. So we went out and found people in near campus student housing, in assisted living, in medical office, and these were all rent-paying kinds of activities.
Cows.
And so we now have, I don't know, Terry, we probably have close to a $10 billion business in real estate, all aspects of it in these specialties.
It sounds like you've pretty much stayed to your knitting in terms of your view of the world. Is there some pivot that has been particularly where you maybe had some great lessons that you could share with us, Rick? I mean, your philosophy is very clear in terms of what you said at the beginning.
Well, we think from the ground up. I don't know that there's been big pivots. One of the things, as a statistics major, I've always been amused that the academics have tried to put order to to all of the numbers that come out of the financial markets, and it's a natural thing. They try to organize them in a fashion, and so they might take the prices that they see every day and write them down and say, this has been the average, this has been the standard deviation, and all of those other things, all of which, unfortunately, probably has no meaning at all, because the prices are really a function of fear and greed meeting together on the playing field. Okay, and it knows no boundaries. It has no central tendency like the average temperature at UCLA today is unlikely to be minus 30. Okay, but there is a central tendency to the temperature as the sun swings from the north to the south. But the interactions between individuals don't. So as I've sat and observed financial markets, I've seen a 100-year flood every 7 years, and it shouldn't happen. Okay, so at the end of the day, we have tried to be not to predict when it will happen, but be prepared when it does happen. And that's pretty much been the gateway for us in terms of new activities we're involved with. And I suspect over the next 35 years, and that's how long our firm's been involved, there will be more of these episodes, and we will get involved in more activities as you get into extreme bouts of fear and greed. And the fear generally is when we've found a lot of good things to do.
You own a lot of pipelines too, right?
Yep.
Would you say you're the largest owner of pipelines in the country?
Oh, I don't know. We have our share.
You have your share? Well, that's a good way to control an important part of the business. Rick, I want to shift a little bit and ask you about some of the broader contexts, some economic policies that might be, people talk about, for example, the Green New Deal, just a label. And do you have a perspective on the sort of the broader context in which policy is being set? Without getting political, I just wanted to get a sense of what you thought about some of the economic ramifications of different regimes that are being discussed today.
Well, I think it's, we are in a position today where we are the locomotive, and we're driving not only our economy, which is growing very nicely, as well as being very helpful in an international sense. I think to the extent that you take away our competitive advantages, and the Green New Deal is, is something. First of all, it's a dream, but it essentially it's quite impractical, and it would be too jarring to we've had a situation where in the United States we've seen natural gas prices go from $12, $13 down to $2.50, and our electricity rates have gone from, let's say, $1 to $1.50 during that period of time, and it's because we have had a growing inclusion in our energy base. If it was just natural gas, we would have declining electricity rates. They have rapidly growing electricity rates in other countries that have had more green and less natural gas. So at the end of the day, I would worry a lot about the practical implications of getting too far out. There are days when the sun doesn't shine, and there are days when when the wind doesn't blow, and the amount of, there's a kind of a pipe dream that people believe that maybe wind and solar can go through the same kind of productivity advancements that the semiconductor did, but it's not true, unfortunately. There are physical limits in terms of the efficiency of those. You can't have a turbine go faster than its theoretical, and you have taken and made them more and more efficient, but you're approaching those limits now. So, and the other thing is the combination of those with, they need storage. Okay, they need batteries because you don't want interruptible power, and Tesla is talking about building a giga plant up in Nevada. And unfortunately, to provide the amount that would be necessary for the country for a couple of days,
a lot of batteries,
would take 1,000 years of building those plants. And it's batteries, interesting. If they come up with some form of fusion and there's a real change in the way you can store and transmit energy, I'll change my tune. But for the moment, it doesn't turn out that oil and gas is really has really been stupid. It is. It turns out that it is a unit of energy that it packs an awful lot for a very little. So it takes as much energy from 1 pound of oil. The same in a battery takes 20 pounds of batteries. So you will never put it into planes. You will never, that won't change. But if you are really going to back up the system with the kind of technologies that we know today, it will result in the most massive mining activity that the world has never even conceived of it, to find all of these rare earth minerals that make up batteries.
That's a very interesting point, and maybe somebody can pick up on that. Let me switch a little bit and ask about your style as a leader and someone who puts business together. And obviously, you've been very successful. You've hired a lot of great people. I'm privileged to know many of them, and they have done well. What is the secret sauce? I mean, what is it that Ric Kayne looks for when he puts together a team or assembles people? How do you motivate them? How do you keep them excited? How are you as a leader?
Well, you could ask these people, but I've beaten them for years, and they're still with me. But I think at the end of the day, I have a very, very strong belief in the power of partnership. I like it to be Rick and his partners rather than Rick and his helpers, and I believe there's an awful lot of power in that. And we're involved in a whole bunch of different activities, and you better believe that we have some technically very, very proficient people in those. But the people that run those, I've been very fortunate to. One of the things that I've said for years is that I set out to hire people smarter than I was, and I've been very disappointed at how successful I've been. But these are just extraordinary people who, if they are not made to feel as though they own their activity, then we haven't done our job. And if they aren't made to feel as though they enjoy the sense of partnership with me and the firm, then we haven't done our job. So it's a kind of a unique subset, and you're looking for people with talent, you're looking for people with drive, and you're looking for people, most importantly, with integrity. And you want to put them in a position where they are the owners of their activity, and they can get their DNA and their fingerprints all over it. And we've been pretty successful at assembling. And I would say that if you met the leaders of our activities, you could not distinguish them from the heads of any other firm. They are really spectacular people.
Well, that's a good compliment to really the way you develop things. And I can speak for some of them as being really outstanding business people. And they epitomize the kind of values that I guess people will call it the culture that you tried to create at Kayne Anderson and in some of its other properties. Now, you did get out of the investment management business a few years ago. What, was the exit the right time, or how did you think about that when you decided to do that, Rick?
Well,
because the other stuff you kept for quite a while.
Yeah, we've always had a difficult time thinking that we could make above average returns in conventional kinds of securities, and we developed a strategy that we thought we could do that. And we started that in 1990, and we developed it, and it grew. We started with $30 million worth of private accounts, and we ended up in 2001 with $11 billion of private accounts, and it was a successful business. But we proved to our satisfaction, not only could we not add any value, we actually detracted from the value. And so we came to view that activity not as an investment activity, but as a marketing activity. We came to view the kind of investment performance in the context of market related, as opposed to where we could distinguish and add value. So adding value is called alpha, and being market related is called beta. We viewed it as a beta business. That was not of interest to us. All of our activities have been alpha businesses, and so we spend all of our time doing that.
Well, another point worth exploring from somebody in the audience. Rick, for those of us of our age, people sometimes think that maybe we should slow down, but you're pretty active in a whole variety of things. Could you talk a bit about the kind of portfolio that excites you these days? Your entrepreneurial pursuits and some of your philanthropic activities, or what are you doing?
Well,
as chairman of this wonderful
well, I'm the
organization?
chairman of this company,
Yeah.
which is a terrific company, and I, continue to try to be as relevant as I can, and I love the investment business, and I love growth. In about 8 years ago, I decided that I wanted to own something outside of the United States, and I went and I bought a piece of property in New Zealand. And it turns out that it was property that I came to believe was probably the finest piece of property that I had ever seen for the building of a golf course. And I'd played the top 100 golf courses in the world. So I bought this, and I brought in my favorite golf architect, and we now have a golf course that is got major international recognition. We're actually ranked as the finest golf course put on the face of the earth in the last 85 years. And so we actually bought a lot of property, and we have more property that we could do the same thing with. So one of the things that keeps me busy is I've decided to challenge myself with the idea that we could create the Monterey Peninsula in the Southern Hemisphere.
Wow.
And so we are now in the process of building 2 additional golf courses and a resort, et cetera. So that's the present challenge. Second thing is that I just bought a company in the comfort shoe business, and I'm going to ask you to take your shoes off.
What?
Please. So.
Well, good thing I didn't wear my socks with holes today.
So, come on over here, Big Al. Okay, so stand here and hold your hands like this, please. No, just stand there. I'm going to apply some pressure. Okay. It seems as though you just fell over. Okay, would you please stand on those? Okay, put your hands out. I'm going to apply some pressure.
Oh my goodness.
Do you feel any difference in the force? I don't know whether I turned red when I did that.
Wow.
Okay, but I would say that what's happened is that these have put him in touch with the ground. His balance, his alignment, everything else was better. The little company that we bought is called The Walking Company, if anybody wants to go to it. And it is the largest...
I want 2 of those things.
But I would say that for alignment, for health, and one of the things that I enjoyed, and I mentioned the other day, is that probably 15 years ago, I viewed walking as a chore, and now I view it as a pleasure. And so at the end of the day, I have these in all my shoes, and I recommend everybody have it in all their shoes.
This is fantastic. This is actually quite something, Rick. And on the philanthropy side, talk a little bit about some of the things you're doing. I know about the work with Alzheimer's and so on, and I really do think to get a full view, and I know you're really concerned about education and how it's not working, and could you talk a little bit about that?
Well, I think the greatest challenge that we have today, we have a number of challenges, and probably the biggest is essentially preparing our people to be relevant for the future. Nobody's sitting around. The pace of disruption is going faster than ever. And so it's the job of education to prepare our people to be relevant, and so that's vitally important. We have probably 5 or so different programs that we're deeply involved with, all of which are focused on teaching people to fish as opposed to giving them a fish. My daughter's on our foundation, and so there's some programs that we are hatching that we're very pleased with, and and it's, once again, it carries with it the same sense of organizational empowerment. We've tried to find people that are really good, they're deeply passionate, they have high integrity, and it doesn't really matter to us whether or not it's in a profit making or where we could measure our profits by the social the social benefits that it produces.
This is terrific. Rick, we could go on for a whole nother hour or so. You're obviously, you've had a fascinating life as an investor. I know about the golf, and I've had a lovely time visiting your Terra 80 when we were in New Zealand. But I appreciate where you're concerned about giving back. Now, I'm going to ask those in the audience if they have any questions feel free to grab a mic. I think I have a few minutes, right? By my estimation, I've got at least 10 minutes. Okay, just wanted to be sure because that was the plan. So we'll take a few questions,
Okay.
Senor.
Unless they're tough.
God, I like those shoes things.
Thank you very much. Mr. Kayne, I remember some of those private accounts were my clients in the 90s when I was at UBS, so I've always respected your work. And the question I'm going to ask you may be challenging, but it's said with the utmost respect. With energy, wind and solar are now really approaching the cost of natural gas. And I'm an investor in some companies that are actively pursuing like battery technology with off-the-shelf minerals from hardware stores as an example, to not challenge you, but to look at where are you seeing opportunities where you might not see the future based on your history, but there are opportunities for diversification. And in island nations, for example, conventional fuels are untenable with the kind of costs that are involved in getting the fuels to market, where solar and batteries are really good economic models. So the question I have is, how are you looking at those opportunities so as not to be what Bill Gates said when he thought that people would not need anything more than a 20 megabyte hard drive in the 90s?
We're quite interested in renewables. We actually have a portion of our firm that's dedicated to renewables, and we think that there's good vitality. We think that renewables will take a larger share of the overall energy pie in the future. However, we do question that on a total cost basis, considering the backup power needed to run them for the kinds of, for most applications, it still requires subsidies. And on an incremental basis, for the power that is actually manufactured at that moment and transmitted to the, to the utility, the incremental cost is getting very, very close, if not even, on par. And so we're going to be, a part of our firm is going to be in a very balanced way overall, and we see it as an important growing part of the pie. Don't take me that it's oil and gas exclusively.
Thank you, Rick. Thanks for your comments. Quick question. You mentioned rare earth materials. What is the best way to invest in that category if one believes in it? Because there is an ETF, but it has underperformed for many, many years. Is there a better way, and do you have a different way to go about it?
We don't spend a lot of time thinking about it. I'm sorry, I wouldn't be a good resource for that. There's just too many different projections of how it's all going to turn out, and I can't. And it's not an area that we believe we have a knowledge advantage.
Thank you. I have a question about the inserts on your shoes. Are they good for athletics?
Say it again. Are they good for athletic? Absolutely. As a matter of fact, the absence of them is bad for athletic.
Hi, Rick. Thank you so much for your comments. I'm a real estate investment professional, and I wanted to know what are your thoughts on the commercial real estate market? Do you anticipate a recession in the next few years?
We are very, very focused on a couple of niches that we're involved with, and don't think that much about the broad commercial real estate market. We're deeply involved in a couple of areas that are extraordinarily management intensive. Assisted living for us is, in effect, we are in the cruise ship business and providing entertainment and pleasure to people who are private pay folks, and we are enjoying and will enjoy for many, many years what we refer to as a silver tsunami. And so it is, that has a big demographic impact on both assisted living and on medical office. Overall, I can't tell you, thoughts about malls, about office buildings, about conventional apartments, all of which are probably less management intensive. Maybe malls are quite management intensive, but less management intensive than the kinds of things that we do, which are more niche-y. Sorry, I can't help.
How do you balance your shale business with concerns about the environmental impact of shale production on air quality, drinking water, and potential earthquakes?
As best we can. As best we can. I think that when you go to the kind of regs that have been implemented in Colorado and in Ohio, you would find that they've done it in conjunction with a couple of the big environmental organizations. And I think that there's probably improvements that will be made. I don't know that it's really had an impact on, a widespread impact on drinking water, but I do believe that they can do a better job. I think burning off gas, I think they got to capture it. And some states are doing it, and other states aren't doing it. And I think they can do a better job. I think they can do a better job in it.
Got time for a couple more questions, so let's get the mics to a couple
Hi,
of
Rick.
hands.
Robert Maltby, Singular Research, fighting the fight for active management 24/7. Question to you that we go through and wonder how you address it. How do you deal with the two 800-pound elephants in the business? The declining level of fees, the compressions there, and the increasing popularity of passive investing through ETFs. Thank you.
Just give up. I don't, it's hard for me to answer that because you have a seriously declining number of public securities. And we've probably got 30 companies that are all software companies that are growing very, very rapidly in our growth capital. Not one company, and that's 30 today, and we've had a lot more than that, not one company has mentioned the idea of going public. Not one. And so when you take the combination of full disclosure and the kind of rules that are, surround the protection against insider trading, and then you take the advent of the computer, which given if somebody was a quant and they were given the trading records of a successful investor, they could mimic it in a very, very short period of time. So it's taken away a lot of the edges from it, and I think it makes it more and more competitive. And so I've become less and less interested in public securities. I'm more interested in private deals and in deals that where a buyer and seller can meet together and satisfy each other's interest, and that may present a good investment deal. And so we just try to stay, I'm trying more and more to stay out of trouble in the public securities markets and be prepared to take advantage of private deals and all they have to offer.
Rick, I think I'm going to take the last question.
Yeah.
We got a group of MBA students as well as investment professionals in the audience, I could not leave this podium and conversation without asking you about what advice would you give MBA students who see themselves as maybe being finance professionals of some sort, an investment career, or so forth in this environment. Should they do it? Should they not? What's the deal here?
Well, I think it's, it continues to be, savings continues to be a lucrative area. I think it continues to be a pretty good tailwind. And if you want to just join an industry, it's probably quite a good industry. If you would like to be a well above average performer, then do one of two things. Figure out how to generate alpha, okay, which really comes from having a specific knowledge where you know something and that what you know is relevant because it's something that is not known by the market in general. So if you study something and you really become a specialist and an expert, that's a good way to outperform. Or you become a marketing specialist and you are good at handling clients and providing them with solutions. And I think both of those are very, very good ways to make for above average careers for yourself.
Join me in thanking Ric Kayne for joining us this afternoon.